I'm George Ratiu, Manager of Economic Research with Realtor.com. We are headed into the final stretch of the year, looking forward to holidays, get-togethers, and retail discounts. This year's holiday retail season will be closely watched for signs about consumers' ability to weather rising prices. Economic activity continues expanding, but there are signs of moderation. The ISM Manufacturing and Services indices remained in growth territory but slowed in October. Due to high costs, manufacturing saw weaker business spending and slipping demand. The services industry expanded at the slowest pace in 2.5 years. This week's data highlighted that labor markets remain strong. Payroll employment advanced in October, outpacing market expectations. The headline unemployment rate rose, as did average hourly earnings. At the same time, companies are still short of workers. There were almost 11 million posted jobs in September and only 6 million unemployed people looking for work. Over 4 million people left their employer during the month looking for better conditions and higher pay. Layoffs remain near pandemic lows as the number of jobless claims declined in the last week of October, even as some large companies announced hiring freezes and payroll contractions. Against this backdrop, the Federal Reserve announced this week that it is increasing the funds rate by another 75 basis points and continuing to shrink its balance sheet. For the Fed, a tight labor market amplifies the concern that workers will command higher wages, keeping pressure on prices. Real estate markets, on the other hand, are feeling the impact of the Fed's monetary tightening. While mortgage rates declined this week below the 7% threshold, expectations of continued inflationary pressures remain. With the 30-year rate almost 4% higher than last year, today's buyer of a medium-priced home is looking at a monthly mortgage payment that is about $1,000 higher. With fewer buyers active in the market, inventory is rising. Realtor.com's latest data indicated there were 189,000 more homes for sale on a typical day in October compared to last year. Meanwhile, the share of properties with price cuts rose to 21%, above the level from 2017. Our more recent weekly numbers echo the trends going into November, with active listings rising, homes spending longer on the market, and prices decelerating. This week, we also released our quarterly cross-market demand report. The numbers show that Americans are looking for affordability wherever they can find it, increasingly across state lines. Many seek an escape from expensive coastal cities and toward more affordable ones in the Midwest and South. Stay well and remember to vote. We'll keep you in the know at our website and Twitter feed.